Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And in this video, we're going to cover CLM, the Cornerstone Strategic Value Fund. I know many of you have been asking me about this video, and I'm pretty sure that this will literally be my final video on this fund. What we're going to do is go over the 5 most important things you need to understand about this fund. I promise you that if you understand these 5 things, you will understand fully what CLM is, how it works, and most importantly, if it's right for your portfolio or not. Remember, guys, this is a US listed fund. So it's on the American stock market. But as you know, as Canadians, for us Canadians, you could leave it in your RSP or Lira to avoid that 15% withholding tax. So what will we cover in this video? Well, first, we're going to discuss quickly what CLM is. It's a closed-end fund. Number 2, what's inside CLM? When you're investing in CLM, what are the stocks you're actually investing in? Number 3, the distribution policy. Very, very, very important. A lot of confusion around this, but it's actually very, very simple. We're actually going to determine or look into what is the dividend or distribution policy. Number 4, the annual rights offering that CLM typically has. We'll review that. It's funny that I should say annual because they did not declare one in 2023, but we'll take a look at the 2022 one and we'll see how that works. So you'll know if in case they do an annual rights offering the next time, you'll be aware of it. And number 5, what I believe is the most important thing, the key to CLM is the DRIP policy. So we're going to take a look at that. And at the end, after that, I will tell you and share with you the main reason why I personally sold all my CLM shares. Let's get started. All right, everyone, let's discover what CLM is all about. And I forgot to mention this in the intro. There is a sister fund from Cornerstone called the Cornerstone Total Return Fund, CRF. And as far as I could tell, everyone, they're pretty much identical. I have no idea why they have 2 separate funds. It looks like it's pretty much identical, like twin brothers or twin sisters. So I think everything, don't quote me on this, everything I'm about to talk about when it comes to CLM also applies to CRF. They're pretty much identical funds in my opinion as far as I saw. So first of all, the most important thing, or one of the most important things you need to know about CLM, it's not an ETF, it's a closed-end fund. So closed-end funds means they have a limited or a set number of shares. Unlike ETFs, which are open-ended funds where shares are created and retracted every day based on supply and demand, that is not the case for CLM. There is a set number of shares. You see the number of shares here, 225 million, whatever that is, plus. So basically, the thing you need to remember when it comes to closed-end funds is the net asset value per share. What is the actual value of one share of CLM or one unit of CLM could be very different from the actual stock price or market price. And typically, they do trade at premiums. What does that mean? Well, we can look at it right here. So CLM. NAV is $6.97. This is, of course, as of the 4th of August. They typically update this on Friday, I believe, once a week. But for sake of argument, we will just stick with these prices because I am filming this on the 10th of August, but these numbers are from the 4th of August. And I'm literally on CLM's website here, and you just click on net asset value, and this is what you will get. So the net asset value, $6.97, that is pretty much what one unit or one share of CLM is actually worth. That is the intrinsic value. Very, very important. Different from the stock price of $8.71 or the market price of $8.71. So if you buy CLM right now or as of August the 4th, you would probably pay $8.71, but it's worth $6.97. Okay, very, very important. So this means that you're currently have to pay more than what it's actually worth. So you are paying a premium. You see this premium or discount to the NAV, 24.96% premium, which means the net asset value is 24.96% lower than the stock price. So you're paying almost a 25% premium to buy CLM. How do you calculate this? Stock price divided by the net asset value price minus 1 times 100. You could actually do the calculation there. Always the stock price divided by the net asset value minus 1 times 100, you'll get 24.96. So for example, if the stock price was $6.97, if we invert it, and the net asset value is $8.71, it means you could buy it a lot cheaper than what it's actually worth. So in this case, it would be you would see a minus 24.96. It would be trading at a discount. You're getting it at a discount because you're buying something at 697, but it's worth 871. So that would be a discount, right? But right now it's a premium because you got to pay more than what it's actually worth. So it's very important you understand this. When you're investing in CLM, it's always important to compare because you want the smallest premium possible. You don't want to pay more than what it's worth, right? That goes for everything else. And I've personally never ever seen CLM trading at a discount. I've never seen the net asset value more than the stock price, but that's typical for closed-end funds. So that's number one. You got to understand this right off the bat. Very, very important. Number two, what's inside CLM? You're investing in this fund, this closed-end fund. What's inside of it? Well, you have, you just click on press releases or investor reports, and every 3 months they release what they call the schedule of investments, which is basically what's inside CLM. It's actually pretty simple, everyone. Very, very simple. As far as I could tell, it's kind of like the overall US market. It's very similar composition to the S&P 500, but you have the breakdown here. So 99.46% of CLM is in equity or it's in stocks. So it's pretty much stocks here. And you have a small percentage, 5.80% in other closed-end funds. You have the whole list here, but 5.8 is really, really low. So you could actually go through all the closed-end funds that make up that 5.8% if you want. But we'll just keep going down to the next section here. So total closed-end funds, that's it. Next section, you see communication services. 8.19% of CLM is in these stocks: Alphabet, Comcast, Meta, Netflix, Walt Disney, T-Mobile. All blue chip, solid stuff here. 10% is in Amazon, AutoZone, eBay, General Motors, etc., etc., etc. Consumer staples, 7%. Costco, Coca-Cola, Hershey, Pepsi. You'll recognize a lot of these stocks. 3% in energy. There's 5.5% in other ETFs. But as far as I could tell, they all look like broad-based. Here's the SPY. Here's the QQQ, which is a NASDAQ. Here's another S&P 500. So ETFs that cover the overall market. There's one in technology that covers the technology sector. That's 5%. 12.85% in financials, Bank of America, Burke, MasterCard, JP Morgan, 12% in healthcare. So you could look at this yourself, but basically a big chunk in the technology, right? Apple and Intuit and Microsoft and Video Materials, a little bit of real estate, a little bit in utility. So it's pretty clear to me that this is kind of like the S&P 500. So when you're investing in CLM, it's nothing risky, everyone. It's like an overall American market fund. Very, very similar to the S&P 500. And that's actually why they actually compare the performance to the S&P 500. So first two things covered. What about the distribution policy now? Okay, dividend plan or the distribution rate. How is that determined? Well, it's actually pretty simple. If you click on any one of these press releases here where they talk about I'm going to open this one where they talk about the monthly distribution. It's actually stated clearly right here. And as far as I know, it's been this way for many, many, many years. And here's the important part. Each board today, blah, 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 for the year of 2024 will remain at 21%, which will be applied to the net asset value of each fund. Of course, they're talking about CLM and CRF. At the end of October 2023 to determine the distribution amount for 2024. So very simple, everyone. Every year, the last day of October, that's when they determine the distribution rate or the dividend rate for the whole year or the following year. So the 2024 dividend amount will be 21% of the net asset value of the fund as of the end of October. So remember, we go back here, the NAV is 697. So let's pretend it's October 31st. They're going to reset the dividend amount or determine the dividend amount for 2024. All you have to do is, what is 21% of 697? That will give you a number. And, I'll take the current one, for example. The current dividend rate or annual dividend rate is $1.4736 for 2023. Right, so if you look at the dividends amount, you see they've even declared pretty much all the dividends for 2023. It's 0.1228 cents a month, right? But if you just multiply, that's monthly. So if you multiply it by 12, you will get the annual, which is $1.4736. So super simple, guys. At the end of October, whatever the net asset value is of CLM, what is 21% of that? Whatever that number is, that will be the annual dividend rate for the following year. Divide that by 12, you'll get the monthly. So let's pretend that it's 697. Let's say it's October 31st. CLM's NAV is 697. All you have to do is 697 plus 21%. That's $1.4637. So $1.4637, that is going to be the new annual dividend rate for 2024. Hypothetically, of course, divide that by 12, you'll get the monthly amount. So as far as I know, this has been the distribution or dividend policy for a really, really long time. If you actually, go through the dividend history here, you'll see that, right now it's 12 cents like we saw. So before that, for 2022, it was 18 cents. So basically, it's the same dividend for a whole year, right? And it just gets reset every single year. So people who say, the dividend was cut, the dividend was increased, there's no cut, there's no increase. It's just reset at 21% of NAV at the end of October. That's it. So it could go up, it could go down based on the net asset value. So let's say this amount, we still have a few months before August 31st. So let's say the net asset value increases dramatically because the overall US market goes up. Let's say it's 750. Well, 21% of 750 is going to be higher than 21% of 697. So it would be a higher dividend for the whole year of 2024. So that is the distribution policy of CLM and how it works. Very, very important you understand that. All right, everyone, it's time to talk about CLM aspect number 4, the annual rights offering. So remember, CLM is a closed-end fund. In order to issue more shares, they do what's normally, typically every year, a rights offering. Think of it like a mini IPO, right? It's to make the fund bigger and issue more shares. They typically do one every year, but for 2023, they haven't done it yet. They typically do it near the beginning of the year in April, and we'll check out the one in 2022 just so we could see what this is all about. But I repeat, this is typical. They have not done one in 2023. I cannot tell you the reason why. Okay, so let's look at the 2022 one. What is a rights offering? It's amazing the information you could get if you actually read the press release. So typically, they do you got to look at the percentage. So this is a 1-for-3 rights offering. So for every 3 shares of CLM that you have, you could get 1 share at a specific price. Okay, very important. So if you have 30 shares of CLM, you're allowed 10 rights or 10 new shares. So you get 1 for 3 basically. So at what price is that 1 share for every 3 that you have? Determine that. Well, I have it here highlighted here. For every 3 rights a stockholder receives, he or she will be entitled but not required. You don't have to participate in this rights offering, okay? To purchase 1 new share of the fund, of course, right? For every 3, you're allowed 1. At a subscription price equal to the greater of 112% of the net asset value or 65% of the market price. Okay, so for that 1 share that you're allowed getting for every 3 shares that you have, again, you have 30 shares, you're allowed getting 10. The price is determined, what are you getting the share at? Well, it's either 112% of the net asset value or 65% of the market price, whichever one is greater. So let's take an example. Let's say they do a rights offering right now, and the net asset value is 697. If we do 697 plus 12%, 112% of 697 is 697 plus 12%, it would be $7.80. What about 60? The other option was 65% of the market price. So what is 65% of 871? It's $5.66. So it's the greater one of the two. So it's obviously going to be $7.80. So we eliminate that one. So the price, the rights offering stock price that you're going to get your shares or your rights of shares for this offering is $7.80. Would you do it? Would you buy more CLM shares at $7.80 instead of $8.71, which is the stock price? Of course you would, right? So typically people do get or do participate in the rights offering. To participate, you have to talk to your broker. If you're with Fidelity, if you're with Questrade, if you're with whoever, you got to go through them, I believe, to sign up for this rights offering. So for every 30 share, let's say you have 300 shares of CLM, you could buy with this rights offering 100 shares at $7.80, which is lower than the current price on the open market. So this is what you could call a dilutive offering, right? Because if the stock price is 871 and they're issuing a bunch of shares, that's why they're doing only 1 for 3 at 780. Well, that's going to bring the overall price of the shares down significantly. So this is why when CLM does a rights offering or they announce it, typically the fund goes down very, very hard because they're diluting the share price. They're diluting the stock, right? If they're issuing shares at 780, new shares at 780, but the current stock price is 871, the stock price is going to go down. So typically, if someone is a lifer CLM investor, they like to invest during the rights offering. Either they enroll in the rights offering and the maximum they can, remember it's 1 for 3, or sometimes if you don't feel like going through your broker, the stock price will go down significantly, which means the premium percentage will go down significantly, and it's a great time to buy CLM. So that is the rights offering and how it works, everyone. Typically, it's annually. They haven't done one for 2023. I don't know why. My guess is that the premium was too low. I believe back in April of 2023, the premium was under 15%. So I guess they don't want to dilute it too much. I really don't know the reason, but that is how the rights offering works. And in case they do announcement for 2023 or there's one in 2024, it's very important to actually read the article. Okay, all you need to know is the amount. So this one here is 1 for 3, and at what price are they going to issue these new shares? And it's basically the greater of 112% of the net asset value or 65% of the market price. It's not rocket science. These are closed-end funds, so to issue more shares, they need to do kind of like a mini IPO, which is this rights offering. On to point number 5, which I feel is the most or one of the most important points to understand about CLM and CLM's greatest advantage by far, the DRIP plan. So the DRIP plan here, this is the annual report, 2022 annual report, which you could easily find on their website somewhere. I don't know where it is. I think it's an investor report. Yeah, investor report, annual report. That is literally the file I'm in. You go to description of dividend reinvestment plan, and this is the important part. The method for determining the number of newly issued shares received when distributions are reinvested will be determined by dividing the amount of the distribution either by the fund's last reported net asset value per share, that's the NAV, or by a price equal to the average closing price, market price, stock price of the fund over the last 5 days, whichever is lower. So let's say your DRIP is going through right now at these prices. Obviously, what's lower is the net asset value, right? Not the stock price. So when your DRIP goes through, you're actually buying those shares at 697, not at 871 on the open market. You're actually getting them literally 24 or 25%, just under 25% cheaper than the stock price. This is extremely powerful. You're picking up more CLM shares much cheaper than on the open market. You're dripping, you're causing a crazy compound effect over time. You're always dripping them at NAV. But here's the thing, everyone. It's not good enough just to turn your drip on your broker to get this. To actually drip at NAV, your broker, whether it's Fidelity, whether it's Schwab, whether it's in Canada, it's Questrade or Wealthsimple or TD, your broker, here's the key. Your broker has to be registered in the CLM drip plan. It has nothing to do with your account. You can't just say, turn on the drip and you'll drip CLM at NAV. No, depends if your broker is registered with CLM. And unfortunately, as far as I know, none of the Canadian brokers are. Only the major US brokers are enrolled. Makes perfect sense, right? The US CLM is a US fund. So I have Questrade. When I know this for a fact because I actually dripped CLM for 1 month in Questrade. When my drip went through, I didn't get my shares at 697. I got them at 871 because Questrade is not registered with CLM. I talked to them about it. They have no interest in doing so. It seems like they don't really care. So to know if you're dripping at NAV, if you have CLM on drip, 2 things you could do. Call your broker. Pretty much guarantee you all the Canadian brokers don't. Or look at your drip price. When you look at your account transaction details, you'll see at what price it's dripping. If you see that the stock price during the day of the payout was 871 and the NAV was 697, if you got your new shares at 697, congratulations, it's dripping at NAV. But if the price is 871, you are not dripping at NAV. So to me, this is the most important or the biggest advantage CLM has, dripping at NAV, because you're literally getting your shares cheaper than on the open market, because CLM pretty much always trades at a premium. The stock price is typically always higher than the value. So to drip at NAV is extremely, extremely powerful, everyone. So why did I sell all my CLM shares? Well, it's basically the last reason I told you. It just killed me that I cannot take advantage of CLM's most biggest important advantage, dripping at NAV, because I'm in Questrade. I use Questrade. It's a Canadian broker, and I'm not going to switch all my stuff to another broker just to get CLM at NAV, although you can do that. I'm a non-resident now. My non-residency just passed. I don't want to rock the boat. That is why I decided to sell off all my CLM shares. It's not because I don't like it. It's because I don't like taking advantage of the dripping at NAV, unfortunately. Another reason, remember, CLM, this is more the minor secondary reason. What's inside of it? It's the whole US economy. It's very similar to the S&P 500, hence why they always compare the performance of CLM. This is their latest annual report. You just go to performance information to the S&P 500. That's what they compare CLM to. And as you could see, it's a little bit behind CLM in the last 5 years, 10 years. But the performance is actually pretty close. I think I even remember that the 2021 performance CLM was ahead of the S&P 500. But here's the caveat. Here's the important thing. These performance numbers are if you're dripping CLM at NAV. You'll see that in here, right? So CLM's is a really, really good fund, pretty similar in terms of performance and composition to the S&P 500. We know the S&P 500 is king. So, people who just look at the stock chart and see CLM going down and saying it's a horrible stock, they have no idea what they're talking about. They don't understand how CLM works. The big advantage with CLM is that dripping at NAV, it's a very, very high income, a very high yield product. It's definitely an income oriented product. But hey, if it's not for you, it's okay. There's plenty of great alternatives out there, and I'll share with you just a few alternatives in case you have CLM and you want to maybe switch to an ETF because you also are not getting the drip at NAV. If you're, I know that the major US brokers like Fidelity, I think IBKR and Schwab all drip it at NAV. I feel, and I'm pretty sure that if my broker would drip CLM at NAV, I would keep CLM and just keep dripping and compounding that interest away, because the performance is good and the composition is very, very basic. It's actually, as we saw earlier, it's mostly blue chip stocks in the US, right? So a couple of strong competitors in an ETF form where you don't have to worry about the closed-end fund structure, the rights offering, the dripping at NAV. ETFs are much, much more simpler. I'll give you three. So JEPI and JEPQ, these are from JP Morgan. They're kind of like overall US market with monthly income. So JEPI is more S&P 500 like CLM. JEPQ is a little bit more NASDAQ, which is included in the S&P 500. And another great option would be SPY. And for all three of these ETFs, I've made videos on the channel. Not only a review video, but also a Q&A with the fund manager. That's right. I actually had the pleasure of interviewing Hamilton. Where is he here? Hamilton Rayner. He came on the channel. We talked all about JEPI and JEPQ, how it works. I strongly suggest you check out that video if you're interested in JEPI or JEPQ. And I've also recently done an interview and a video on SPY and the main guy at NEO. So these are great replacements in case you're thinking of, getting rid of CLM and putting it in something else. But I strongly suggest, most important thing, everyone, if you're dripping it at NAV or not. You got to find out. If you are, I would keep it. I would drip it. Amazing compound interest over time. I would also take advantage of the rights offering whenever they do it to get more shares. And so that's pretty much it. So hopefully you understand everything there is to know now about CLM. And if you're asking, well, you sold CLM, what did you buy? Well, you're going to have to wait until the next portfolio update, which is going to be published in September. But if you're a PII Inner Circle member, you would already know what I bought after I sold CLM. And if you're interested, just click that little join button. And all my moves, all my trades, are disclosed to inner circle members only that same day. You just got to go to the community tab to see them. So if you join my membership, my YouTube membership, not very expensive at all, you'll know right now what I swapped CLM into. So hopefully you now understand what CLM is all about. If you have any other questions, let me know. But this pretty much will be my final video of CLM unless something really happens. Of course, keep in mind the distribution policy, 21% of NAV reset every October. That could change. Every rights offering could change. Maybe they won't do them anymore. I don't know, but by reading the articles, you could understand what's going on. It's not rocket science. So hopefully these 5 points helped you understand CLM. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.